Are you ready to buy a house, but you're really confused about what kind of credit score you need to have and on what credit reporting agency it needs to be pulled from? It's all really confusing. I'm gonna tell you exactly what you need to know about your credit score so that you're confident about going into buying a house. But before you do, please go and subscribe to this channel if you wanna get more real and honest advice about real estate and financing. When you're ready to purchase a home, one of the first things that you're going to be asked is if you've been approved by a lender yet when you meet a real estate agent or someone who's selling their home. This is where many people put the brakes on, I find, because the unknown about if you're gonna get qualified and what your credit score is, it really creates anxiety. None of us wanna be told no. It's discouraging, right? Luckily for you, I have purchased many homes and I'm gonna tell you exactly what you need to know and how to get there when it comes to the credit score that you need for getting approved for a mortgage. For most of you, most likely you will go to your bank where you have your checking accounts, your checking and savings, and that's where you're gonna ask about getting a mortgage. Problem with this is that banks decide on giving mortgages and credit scores very differently than other financial institutions. Bank 1 on the corner may say, we want at least a 660 credit score. Bank 2 may say, we want a 620. And Bank 3 may say, well, we really want a 700. So a little pro tip, every bank can decide what they want when it comes to the minimum credit score. Now, what the banks do care about when you are applying for a mortgage is your ability to repay the loan. They need to feel comfortable that if they hand you $200,000, that they're going to get their money back in the form of monthly mortgage payments. And so how they determine your ability to repay is through what's called qualification standards. And one of them is the credit score, what we are digging into today. There's also employment and income, your debts that you have, what's called a debt to income ratio, and then the money or assets that you're gonna use to purchase the home. And lastly, the home's collateral, which it comes from the appraisal report. So let's dig into the credit score more, which is the very first thing that I find that loan officers at banks and other financial institutions, what they look at. Credit scores are the hardest to overcome if it doesn't meet what the bank's minimum standards are of all those qualifications. I do want to mention that the score is not the only thing that they look at, but it is one of the hardest things to get over. Now, when you're looking at credit reports and credit scores, there's a couple of things. It's not just about the score itself as we start digging into credit. It's also about, they look at the score, then they look at what's called the trade lines, which is each account that is reporting. They want to see how long that account's been there, which is the length of history that you have. They want to look at what the payment history is. So if you've had an account for 2 years, are they all on time or any late? And then any bad debt that might be on your credit report, like collections, judgments, charge-offs. Is there a bankruptcy, a foreclosure? It's not just the score, so you can have a score over the minimum and still run into some snags. Loan programs have actually very different requirements too. Conventional loans is one group. And conventional loans, for the most part, 620 is kind of the minimum of being able to get a conventional loan. And then you've got government loans like FHA and VA. And really, FHA and VA, they have no minimum credit score requirement. But most of the banks will say, our minimum credit score for FHA is 620 or 640. And then the last thing that I want to bring up here and mention is that if you are going to go look for a house, you might find the best success going through a mortgage broker, because a broker has access to many banks and they will go and they will look at, okay, this bank's a 620 for a government loan, but this bank goes down to a 580. And there are even some banks that we work with at our brokerage that go down to a 550. Another loan type, USDA loans, it's also a government loan, but I have not seen many lenders who go below that 620 mark. And then non-QM loans is the newer category of loans that we have discussed in some of our other videos. And non-QM loans, just like the other ones, it's all based on the bank that's lending the money and what they require for that minimum score and how much they want down for the score that you have. And the last one I want to mention just real quick is commercial loans. Commercial loans don't care as much about your credit score. They really want to know the story and they want to look at the business that you have for what you're purchasing. So I hope that you're seeing how the loan program changes the score requirement, and that the lender that you apply with also really matters. You could walk into 2 banks and get turned down, but still go apply with a mortgage broker who will have an option for you that will allow you to qualify. A mortgage broker is a lending institution that works on your behalf, and what they do is they go and shop across many lenders to figure out which bank that's out there has what you need, and then they negotiate the best rate that they can find for your specific situation. I also like to mention that if you do choose to go and use a mortgage broker, that you don't have to pay them in most cases, because they are many times paid by the lender that they are placing your loan with. The next important thing you need to understand is where your credit score comes from. So there are 3 main credit bureaus that mortgage lenders rely on, and that's Equifax, TransUnion, and then Experian. And all 3 of these bureaus will be giving you a score. And they all, in most cases, are different and at different times of the month. When it comes to lenders, they like to use the middle of the 2. So let's say Equifax gives you a 650, Experian gives you a 680, and TransUnion gives you a 690. Your middle score, that 680, is the one that the lender is going to use as that score that you qualify with. If you only get 2 scores, then they will use the lower of the 2. And if you have no score, most banks will not lend to you unless you are working once again with a broker who has bank options that will allow you to do a no score loan by getting other documentation. There are a few lenders that will do this when you don't have a score. If you know you need to improve your credit after starting to watch this video, what I want you to do is make sure that you hit subscribe to get notified when we release our insider secrets to raising your credit, which will be coming up here soon. And as a bonus for staying until the end, we have provided a link in the description that will give you 1 free credit report a year, as well as some other tools you can use for your credit. I hope that this video gave you some insight on the different ways that banks look at the minimum credit scores and where you can go to have the best success. And if you know somebody who could benefit from this information, please share the video with them. Hit that subscribe button and the bell to get further notifications. Otherwise, I'll see you next time.